Thank you very much, Dave, and thanks for everyone for attending today, taking time out of your Wednesday. Today, I'm going to give you a great educational presentation that you can actually apply these things to any method, any strategy, any market, any time frame. But I truly feel that these are the 4 questions you must ask yourself before each and every trade if you want to become a consistent trader. For example, let's look at this older chart of Adobe. Most traders looking at this would say, well, I really don't know if we're in an uptrend. It looks kind of we're in a downtrend, right? Price is heading lower. So I think I will be a seller. But in actuality, we're not in a downtrend at all. What I'm going to be teaching you today is by asking the first question, you would have known that you were actually in an uptrend. And so if you're in an uptrend, you want to be a buyer. So let's say you would have purchased right here. You would have known where to place your stop. And then ultimately, you would have known where to exit just based off these 4 questions. And potentially, you could have captured upwards of 22.5 points. So this is what we're going to be talking about today, the 4 questions you must ask yourself before each and every trade. And everything you're seeing today is displayed on the platform I developed with Pro Trader Strategies. This is the PTS Primo charting platform that actually teaches traders how to trade. So welcome. Once again, my name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, there's not a lot of them around that much anymore with the advent of electronic trading. If you ever Google those old pictures of the traders on the trading floor making these weird hand signals behind these large wooden podiums with lots of paper on the floor, well, those were trading specialists. They made markets in roughly about 50 or 60 stocks. So in the old days, if you wanted to buy a certain stock, let's say something like IBM or Tesla, you would call your broker on the phone. He in turn would call the floor broker on the trading floor, and the floor broker would walk up to the market maker who specialized in making a market in that particular stock. So we get the name specialist. So I did that. I made markets in roughly about 50 or 60 stocks during the crash of 1987 and the bull market that followed. I left the floor in the mid-90s to manage money and also to trade my own account. And roughly about 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind. That was simply to educate traders around the world. Happy to say we have students in over 115 countries around the world and in every state in the United States. And we have a real attention to detail and really trying to educate traders so they can put the power back in their hands and make their own trading decisions. So I take all the things I've accumulated in my 47 years of trading and share with them with my students. And today you're going to get a great presentation showing you exactly how to elevate your trading. Now, before we begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by asking these 4 questions, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get lots of education on a daily basis is to follow us on Twitter or X if you like. Might suggest copying down our handle right there, abbreviation for Specialist Trading, because every day I post upwards from 5 to 7 different snapshots of signals our methods have generated to little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Okay, with that stated, let's begin today's educational presentation. I'd like to start out by sharing something with you that my mentors taught me, because even though I started on the trading floor, and some may say I had access to information and high-speed computers at the time, there were no such things as PCs or personal computers. No one was using them at all. So someone would say, well, yeah, you were born with a silver spoon in your mouth. You had lots of extra advantages to make money, but I struggled my first year or two on the floor. In fact, I didn't know if I was going to be able to be there much longer because I couldn't really make ends meet. My mentors, who were specialists themselves, saw how much I was struggling, and they saw that I had far too many indicators on my screen, following far too many so-called trading gurus or mentors, looking at too much news and information, too much interest rates, earnings, things of that nature. And they said, Steve, and I remember this stuck with me so well, trading is really simple. It's the trader who makes it more difficult than it has to be. Now think of it. How difficult or how complicated is your trading right now? You have 3 or 4 screens in front of you. Are you following far too many markets, listening to too many traders tell you what to buy and what to sell? You're overcomplicating your trading. And it's really not difficult to do that. Anyone can do that. But it really takes a lot of character to simplify your trading. And you're going to see in today's educational presentation how you can become consistent just by simply asking yourself these 4 simple but powerful questions. Okay, so in order to be consistent, you must always ask yourself these 4 questions, regardless of what market you trade, regardless of what time frame, and it doesn't really matter what strategy or system you trade either. But you have to ask yourself before you pull the trigger, before you enter into the trade. Oh, here's question number 1. Am I on the right side of the market? Now, I know everyone in the world always thinks you enter a trade on the right side of the market. But trust me, if that were so easy, then why do 80% of all traders fail? If you're losing in a trade, it's because you're buying and the market wants to go lower. You're on the wrong side. If you're losing and you're selling and the market goes higher, it's because you're out of sync with the market. You're on the wrong side of the market. So let me share with you how, in my 47 years, what I found to be the simplest way to be in sync and on the right side of the market. Once again, looking at this older chart of Adobe. All right, so it doesn't look as if there's any trend. It's going up, down, up. What we teach our students, the first thing to do is to apply the 50-period moving average, all right? We call this the buy-sell line. And once you apply the 50-period moving average, you ask yourself, where is price in relation to the 50-period simple moving average? And in fact, I would even copy down that sentence, put it on a Post-it, and put it on your trading screen. Because you must always ask yourself, because if price, the majority of price is below the 50, that means the overall trend is down. And that means if you're buying and price is below the 50, you're out of sync, you're on the wrong side of the market. So as we see here, the majority of price is above, so the overall trend is up. So this means we want to be a buyer. You will have a higher level of consistency if you only buy above the 50-period moving average, okay? Remember, it's not meant to be 100% guaranteed that it will always work, but remember, trading is about putting the odds in your favor, giving yourself an edge, and this will give you the edge. In fact, go back and look at the last 10 or 20 trades you had. I can almost guarantee you that the reason why you had losses is because you were buying below the 50-period moving average and selling, or meaning going short, above. Okay, so let's say you accept this and say, okay, well, price is above, that means I'm a buyer, so I'll look for some type of buying setup. And let's say you're a student of candles, okay, candlesticks. And you say, well, I see a pattern right here. This is a bullish engulfing pattern, very bullish, so I'll use this to go long. I'll buy off this pattern, but only if it trades above the high of the engulfing bar. Okay, that's all right. You're in sync with the trend. You're in sync with the overall trend. This leads us now to question number 2, which is, where do I place my initial stop? Now, most students always say, well, where do I get out with a profit? But the first thing you have to do is ask yourself, what if I'm wrong? Where do I get out if I'm wrong? So in our courses, we have upwards of 6 or 7 different stop placements. Let's take the most simplest and generic way of placing a stop. Just go back and find the most recent low, all right? We call that a pivot low, and that would be right here. Let's just use this very basic generic place as our stop placement, okay? All right, we now go to question number 3. Now we can ask, what is my profit target? And the reason why we save this for question number 3 is because it's going to be determined by where we place our stop. In other words, if we enter at this point, and let's say the market went straight down and we got stopped out with a loss, how many points, not how many dollars, how many points would we lose? Well, in this case, it would be 11.25 points. So if that meets your risk parameters, if you're willing to risk 11.25 points, even if you're only trading an odd lot, okay, then what you want to do is double that amount, and that would come out to 22.5 points. And what you do is just simply add it from where you'd be buying, and this gives you your exit point. So basically what you're doing is you're going to be making twice what your risk is. That's a good risk-reward ratio. Now we go to the 4th and final question, which is, how do I protect my profits? We all know that the worst feeling in the world is to be in a profitable trade, one that's working in our direction, in our favor, and then we wake up one morning and we go to make a sandwich and we come back to the screen and we find out that we now have a winning trade that's turned into a losing trade, right? It's the worst feeling in the world because you were feeling good about the trade, now it's turned into a loss. So how do we protect a trade we haven't exited yet, but that has a profit? Well, we apply the 50% line. So what exactly is that, or the 50% rule? Well, we determine where we would be entering, which is right here, and where we would be exiting, and we determine what the halfway point is, the 50% level. And if price gets close to or touches that level, then we will move this stop to unchanged. So let's watch the trade unfold. Let's see if it goes in our direction. And after a while, it's getting very close. In fact, it intersects the 50% level. So now what we can do is move our stop from losing a position to actually unchanged. So now we're not risking anything. We're playing with the house money. And this is where it becomes very simple. We're moving our stop to our entry price. And now the only thing left to do is to watch the trade unfold. This is where trading becomes simple. You see, you don't have to overcomplicate things. If you're trading with tons of screens in front of you, making tons of phone calls, trading too many markets, screaming and yelling, having the TV blaring, well, you're overcomplicating your trading. You're actually not trading correctly. It's more of a gambling mentality. Trading, if done correctly, I found out in my over 4 decades of trading, is very boring if you're doing it correctly. It's like fishing. You simply go out in the boat, you cast your line, and you wait. If you're trading with that same mental attitude, then you're doing it correctly. So all we have to do is simply wait and watch the trade unfold. We're either going to get stopped out unchanged, or the trade's going to be a profit. And in this case, ultimately, it did turn out into a profit. We made 22.5 points. See how simple that is? Let's look at another example here, okay? Let's say you're a technician. You like to look at chart patterns, and you say to yourself, you know what? This is a bullish wedge. This is extremely bullish pattern. I've read all the books on technical analysis, and the way this works is if we close above here, that means we're probably going to be making new highs. You've got to go long. And on the very next bar, what do? We close above. So you decide to buy, right? This is the way most traders make their trading decisions based off of, conventional wisdom. But the trouble with conventional wisdom is there's not a lot of consistency in it. What's the first thing we teach our students to do? Well, this brings us to question number 1 again. Ask yourself, am I on the right side of the market? Now, we can't tell just by looking at that pattern, but what do we do to find out? We apply the 50-period moving average, and then we ask ourselves, where is price in relation to the 50-period? Well, price was originally above, but now we've got 1, 2, 3, 4, 5, 6, 7 closes below, which is more than enough to tell us that the overall trend is down. We will have a higher level of consistency if we're not a buyer, but a seller. Remember, this is not 100% guaranteed, but we're putting the odds in our favor. So we don't want to be a buyer at all. And look what happened. Let's say you had bought based on that faulty pattern. Well, guess what? You most likely would have been stopped out. So you're thanking your lucky stars. You're saying, wow, I guess this stuff really does work. So you say, well, maybe I will go short. Maybe I'll go short the stock. Maybe I'll buy puts. But what's it going to be based on? Well, since you're a technician, you see a ledge right here. You say to yourself, okay, if we trade below, I will sell or go short. All right, so that's your plan. Okay, sound enough. You're below the 50-period moving average. Let's go to question number 2. Not where do I exit with a profit? Where do I place my initial stop? Where will I get out if I'm wrong? Well, once again, we go back in time. And in this case, we're looking for the most recent high, the most recent pivot high. And that's right here. Okay, so this is where we place our stop, just using the standard generic stop placement. Now we go to question number 3. What is my profit target? Well, in order to find that out, we have to find out how many points we're willing to lose. So if we entered to go short here and we were stopped out here with a loss, how many points would we lose? We'd lose 8.20 points. That's how much we're risking. If that meets your risk parameters, if you have enough capital, okay. So what you want to do is double that number and then subtract it from where you'd be entering, because you're going to be going short and you would be making 16.5 points. That's your exit target right here. And that would be at this level right there. So now we know where to go short. We know where our stop is. We know where we're covering if we have a profit, and we haven't even entered the trade yet. This is the design of a professional trader. Professional trader doesn't just trade off a whim and say, well, okay, it's going up, I guess I'll buy at the market. No, a professional trader has a plan, and that's what we try and instill in all of our students. Now we go to the 4th and final question, which is, how do I protect my profits? Once again, if I have a profit in place, how am I going to protect it? I don't want this to turn into a loss. Well, we use the 50% rule. Once again, if we entered to go short here and we were going to exit here, once we get to the half-point level, anywhere near or close to, we'll move this stop to unchanged. So let's watch the trade unfold. 1, 2, 3 days later, we're intersecting the 50% level. So what we want to do is cancel this and move it down to unchanged. Now, once again, we're playing with the house money. We're not risking anything. We're either going to break even or end up with a nice gain. So the only thing left to do is watch the trade unfold. Remember, if you're trading correctly, it's very boring. It's like fishing. You just simply cast your line and you wait. So let's watch the trade unfold. Well, it's going in our direction and ultimately it gets there. So we make 16.5 points. See how simple this process is. When you make your trading simple, you get on that road to consistency. So these are the 4 questions you must ask yourself before each and every trade. Remember, it makes no difference what strategy you're trading, as long as you're in sync with the 50-period moving average. Once again, go back and look at your last 10 or 20 trades. I don't care what strategy you're trading. I don't care if you're a fundamentalist or a technician. I don't care if your strategy is based off of interest rates or earnings reports, or if it's based on the full moon. It doesn't matter. Follow these 4 questions. Whenever you get a signal, first make sure that you're in sync with what the market wants to do. If you get a buy signal based off your strategy, and price must be above the 50-period moving average. If it's a sell signal, it must be below the 50-period moving average. You will have a higher level of consistency if you follow that first basic rule. Then secondly, find your stop placement. Now this was just a standard generic stop placement, the most recent high, the most recent low. It doesn't matter, you can use any type of stop placement you'd like. Once again, in our courses, we teach upwards of 6 or 7 different stop placements for different risk parameters, for traders who like a lot of risk, traders who don't like a lot of risk. It's up to you to decide. Remember, as an educator, we're simply providing you with this information. It's up to you to decide how you want to apply it. Then, next is question number 4. Where do you exit? Well, you simply double your risk in terms of points. If you're risking 10 points, well, then you want to make 20. If you're risking 5 points, well, then you want to make 10. This ensures you that you'll have a good risk-reward ratio and that you'll be a consistent trader. And lastly, this is the most important, protect your profit. Remember, as traders, the worst feeling in the world is to have a profitable trade that you haven't exited yet that turns into a loser. In fact, I would rather be in a trade that the minute I bought or sold, it goes against me and I just get stopped out, as opposed to being in a trade that had a really nice profit that I didn't protect, and then one day I find out it's a major loss. So you always want to protect your profit. Use that 50% rule, and once it gets close to or touching, it doesn't have to touch, it's not a golden line there. It can be close to or over it. It's up to you. But move your stop to unchanged. That way you won't risk anything if it happens to go the other way, okay? These are the 4 questions you must ask yourself before each trade, regardless of what method, regardless of what market, regardless of what time frame. Now, we have a great offer for all of you attending today. Let me tell you a bit about it. This is called our Secrets of a Stock Exchange Specialist video seminar. About 3 or 4 years ago, I was asked to be the head speaker at a trading conference in Colorado, and they recorded my presentation, which was 3 hours of trading techniques and different methods and a lot more information that we're presenting to you. Now, in that 3-hour presentation, I went over a lot more high probability trading edges that you'll see, and I talk about which indicators not to use, basically things that you should be avoiding. I went into detail about the difference between a system versus a strategy. I also talked about the #1 chart pattern that you should be always looking to identify in any market at any time frame. Also, more information about being on the right side of the markets. But here's the best thing I think that's included in this 3 hours jam-packed with information. I give you the complete rules to strategy #1. This is, what I taught you today were just the 4 questions you must ask if you're trading with any method or strategy. But now you have the complete rules to one of our premier pullback methods. This is strategy #1. And what it is a pullback method. If you're not familiar with pullbacks, what it is it looks for an overall trend. Let's say it's an overall uptrend, and it looks to buy on the sell-offs within that overall uptrend. If you have an overall downtrend, it looks to sell or go short on those bounces or rallies. And you can apply strategy 1 to any market, any time frame, and it's just a really great strategy to trade. Let me share with you some examples here. Okay, here's a chart here in ARHS. Okay, now obviously the overall trend is up, right? Now with a pullback type of method, what you want to do is buy at these lower levels right here when they sell off, okay? So on our platform, we make it easy. It's just one click away. And as you can see here, we have strategy number one. All you would have to do is click that on and it automatically would tell you where the buy setups are. And these are actual buy setups that students of the strategy number one course could have taken advantage of. All right, you see how you could have bought right near at the lows and seen a nice profit, right near at the lows and seen a nice gain. And this just happened the first week of March, just a week or so ago. And look what happened right after that, okay? Now in the course, we teach you all the rules, the entry rules, the exit rules, and the stop placement rules, okay? Let me share with you another example. Here's an example in BIIB, Biogen, okay? Kind of looks as if we're going kind of down, but we have a little bounce here the last 3 days, okay? This was just roughly about a month ago. Strategy number one is so sensitive, it actually detected a sell signal right here at the close of this day when it bounced up. Now, where most traders would say, hey, we're making a low right here, it looks like we're going to make new highs. Strategy number one generated a sell signal, and coming into the middle of last month, the stock dropped 25 points in 4 days, okay? These are actual signals that our strategy number one students could have taken advantage of. And then lastly, NVIDIA, okay? We all have seen this stock has been in the news lately. This happened just about 3 weeks ago. The stock was really taking off, and then it had 1, 2, 3, 4 days where it closed near its lows. Most traders thought, well, that's it. It's broken the uptrend. It's time to get out of this. It's probably going to come down and really sell off because it's gone up far too much. But guess what? Strategy number one generated a buy signal right here. This was just a couple of weeks ago, and we've all seen what the stock has done. It's gone up 250 points. This was coming up into just a week or so ago. So this is strategy number one. You'll get the complete rules. You'll know exactly where to enter, where to exit, and where to place your stop, and a lot of other different variables. Remember, you can apply it to any market and any time frame. This is our Secrets of a Stock Exchange training sessions, 3-hour video. It's yours to keep. It's not something that expires in a couple of weeks and then we take it back. It's yours. You get all of the information. It's jam-packed with over 47 years of information, tips, and techniques that I've accumulated to help take your trading to the next level, okay? So let's break it down. Now, the entire session in the strategy number one course usually costs close to $1,000. There's that much information jam-packed within it. But here's what we're going to do with our association of the March Festival of Traders. We're going to discount it tremendously. We're not going to charge you close to $1,000. In fact, we're going to discount it down to $37. That's a phenomenal discount, but this is for a limited time only. So for $37, you're getting more than 47 years of tips, techniques, and a full-fledged strategy that I've accumulated in my trading career. So take advantage of this because this is for a limited time only. This is not something that's going to last for weeks or months. It'll probably go back in the next week back up to that close to $1,000 mark. This is a great way to become acquainted with us at a deeply discounted price. And once again, with our association with Festival of Traders, we really wanted to have a really inexpensive price for you. And as an extra bonus, we're not stopping there. We're also going to include this. Along with your purchase of the secret course, we will include a 50% discount on any other product we sell. So if you really like what you see in the course and all the information you can use, and you want something more of a product, another strategy or something included that we sell and teach on our websites, contact Pro Trader Strategies and you'll still get a 50% discount on any other product we sell. You owe it to yourself to take your trading to the next level. I know what it's like to struggle. My first year, as I said on the floor, I struggled tremendously. Don't overcomplicate your trading. Make it simple. Make sure that you understand these 4 questions, try them out, and then take advantage of this great offer, okay? Here's how to do it. Contact Pro Trader Strategies. They're my sister site. They're in charge of all the discounts and all of our strategies and all of our tech support. You can call them directly at area code 310-598-6677. They have trading consultants manning the phones. They would be happy to take your order or answer any questions that you may have. That link you see at the very bottom, if you'd like to copy and paste that, you can, I believe, I think Dave may be posting that. Either way, that link will take you to the info page, and you can also sign up online if you'd like. But it's a lot easier probably just to call the 310-598-6677 number, okay? That brings us to the end of this presentation. I hope you learned something. Remember to watch this. I believe this is going to be given to you as a video. So watch this over and over again so you fully understand the process. But if you're really set on taking advantage of that $37 offer, don't hesitate to call Pro Trader Strategies, okay? That's it for this presentation. Thank you so much, Dave. I hand it back to you.